Okay, thank you, Albert, for the introduction. In this presentation, I will explain, or try to explain, how the S2S for energy decision support tool is contributing to add value for the energy sector. So just let me go back to the basics, like a raw, very small definition of what a climate service is. From the World Meteorological Organization. So a climate service is a decision aid derived from climate information that assists individuals and organizations in the society to make improved ex-ante decision making. Well, okay, it's a very clear and generic definition, but let's take a more detailed overview on how this definition applies on the DST tool. Okay, so the scope of the DST, it's about sub-seasonal and seasonal scales, and specifically the forecast window that the DST is targeting. It's from 1 week up to 3 months. And this is the first specific target, and the second one, it's about the energy sector, as the name explains. So it targets the energy sector, and it targets the sub-seasonal to seasonal timescales, okay? Because some of the other timescales, like for example, the more short-term, it's widely explored and already have commercial, a lot of commercial offers. So this is an innovation in that area, no? To explore this specific timescale. This is why the sub-seasonal to seasonal climate predictions, it's innovative, because perhaps it's the first time that some interface is merging sub-seasonal and seasonal timescales with, as Isadora said, real-time refreshing data, and with also a detailed probabilistic information that will help the decision makers to take decisions, which is the more important value. So let's take an overview on the energy sector environment, specifically in the deregulated markets, which are the focus of the solution. There are two very big systems, or the most relevant systems, which is the power system, refers to the infrastructure of producing power and delivering, and there's another system which is the power market, which is a mechanism that what it is doing is meeting the demands and the offer at a reasonable prices, let's say, simplifying like that. And these two systems are interacting with many players. For example, the transmission system operators have to interact and take decisions on that power and market systems. The independent power producers, the power utilities, the power traders, of course, that have to operate and interact in that markets. All those players need information to take decisions on the daily basis, and short-term and long-term. So the main purpose of the DST is to provide them signals and indicators to take the right decisions. Okay. For example, what are the decisions that those players can have to take? No, let's say, for example, when to buy or sell power. This is about hedging and trading. This is very important in order to optimize their strategies of economical strategies. So this is a clear decision that have to do in the different time horizons, in the very short-term time horizon, but beyond that also in the sub-seasonal and seasonal scales. Another question, when to sign up power purchase long-term contracts. So that refers to also power price. To engage and commit with prices takes risks, is a matter of risks. So they have to analyze a lot what they need information to decide on that. when to schedule or reschedule grid or offshore wind farms maintenance. So these maintenance activities, mainly offshore, requires a lot of money and investment. So they have to think twice about when to do that and what is the optimal moment. For example, to avoid losses in terms of, so let's say they have to stop wind farms offshore to do the maintenance. They have to stop it when a low resource is performing. Otherwise, they will lose more money. So this type of decisions are impacting a lot on the benefits, economical benefits of those companies. So that's why it's important. Or, for example, the last one: do I need to release water flow from a reservoir? So the reservoirs, they have two functions. Very often, they function to provide water to the population, or the function to provide power. So, and the operators of that reservoirs, they need to make decisions on to keep the water or to produce power and make more money. Well, of course. So, what is what provides the subseasonal, the DST for the DST as output? So the output is like high quality signals for the markets and for the systems, for the power system. We're talking about processed information. There's a lot of efforts on processing that information and put it in clear in display visualization. And it's also probabilistically delimited, which provides a more deep knowledge of the signals that are provided. So this is like a very, let's say, simple decision-making process, which in the end point, normally it's to increase the activity benefits or avoid losses, but let's say be positive, increase activity benefits. So that comes from taking very good decisions, and to make good decisions, the operators need like high quality signals, and this is the value that the DST provides to the market players, to the system operators. It's like high quality signals in the scope of subseasonal and seasonal time scale to provide, to take the appropriate decisions. But this process is, the decision-making process is really specific for the player of the market player or the company. So we are not going there at all. So this is really the core business and like industrial secret of the companies. So what this project can do is improve above the inputs that are driving some of these decisions. How many time I have? It's okay. Well, so the variables in the DST. I think we have explained it. We have explained it in the beginning and early this morning. Just a review. Important that the variables are at grid point or per aggregation, country aggregated. So and basically there are two blocks of variables: the essential climate variables, which are temperature, solar radiation, precipitation, and so on, and the energy variables, which are processed signals, which models behind that calculates directly the energy output of at grid level or country level. So let's take a look on, for example, what are the drivers on the power markets. Here I pointed the electricity market and the gas market. So the drivers in red are the ones affected by climate or energy indicators, and the drivers in black are other drivers. So this is just to show the complexity of the drivers, of the price market drivers, okay? But it's also to show that the contribution of the S2S for DST in having good inputs to understand and forecast those signals, okay? Let's say, for example, this is a plot, well, a graphic with the evolution of the daily average for every month pool price in Spain. The green, light green is 2017. The other one is 2018. Okay. This is to show an example of a quarterly variation of the price in the market price of the electricity. So let's say in the 2017 the trend was like playing a little bit down. In 2013 or 18 for the same quarter the trend was up. Okay. Well, this information, these trends and this information, it's impacting the operations of the trading companies. Okay, so they need to decide on that time horizon. They need to take risks on that time horizons, and that's why they need inputs to decide and to work on that on the decisions. And this is the S2S is contributing on understanding the patterns behind that. Not always. I mean, there's other factors that goes in this, but it's really contributing. This is another example. Also, during a year, the whole year, the temperature is the black bar. So how the temperature is impacting on the monthly electricity demand. Okay, so of course there's again other factors, but this the output of the DST will help the TSO, or in that case, to anticipate these variations. So as a summary, the potential beneficiaries of the energy signals. So we have identified as the transmission system operator and the IPPs. ONMT IPPs, it's independent power producers, which are operating and investing in production facilities. So then those are the major beneficiaries of having this information, okay, in terms of direct energy signals. The second beneficiaries related to price signals, which the S2S is not providing a direct price signal yet, or it's not the idea, but it's providing the right inputs, or some of the right inputs for the price signals that are using the traders, aggregators, or energy consultants. Okay, it's important to remark that the probabilistic approach, it's very important to make their decisions. And that's all. Thank you very much.